you see where this little trend line comes in here, and traders that think that we're going to get the same move we got yesterday and come back down. But the push here traps and holds on to them, and 1, 2, 3, 4, 5, 6, 7, 8. 40 minutes. Actually, these are 10-minute bars. So 1, 2, 3, 4, 5, 6. It's an hour. I'll put it back to 5s. You can see we're correcting through time rather than through price, and that's the purpose of a squeeze bar. So we have late shorts. Anybody that says I want to make it a little bit get something going. And the more you wait for confirmation, the less profit there is in a trade. That's why the edge comes to those traders who are willing to short the double tops. And then we get the rise back up, and here you go. Place your bets. The casino again. Okay, you want to try it again, guys? And then you need to make decisions, because for most traders, again, the bull climbs the stairs and the bear jumps out the window. We jumped out the window here, intraday style, and that's it. Oh, didn't get all the way back to the first floor, only got to the second floor, jumped from the roof. And then right back up. That's why I said this was like whack-a-mole, where it keeps floating right back up to the top. And those traders who went back to the well in the middle area get squeezed, and then we get the chop again. And that's why lunch trading is so hard for most traders, because usually it's a choppy range, very limited range. So most traders, you're better off finding a trade that moves quickly if you can, and then if you are a long side trader, you got to have the discipline and wherewithal to just, if you have a trade that's working, to let it go and stay out of the way of over managing it. It's not tradable. This is not a tradable range. Is a managed trade for anybody who bought the 92s and wants to test the highs and takes profits when you get near our resistance zone. And then obviously if there's a trailer, that's up to you. We said today you probably would do just as well by playing hit and run and taking profits rather than worrying about trailers. We just felt it would be, a little bit choppier because of psychology reasons. And the bulls, of course, want to knock these stops. That's the whole idea today of being conservative on thinking too much short side. And obviously the long side, at the level we're at, you can't just close your eyes and buy it. That doesn't make sense. $30-minute chart yesterday in play, 15 today, pushing here. And the market is riding this wave. But if you're looking at that from a longer term, certainly we can go higher, of course. But from the perspective of where our yearly print low back in here, we had a 38. And here we are, obviously, with the RTH low in here, riding this channel. Manipulated move. So again, encouraging you not to overtrade today. Afternoon becomes a position squaring, and you can get a little volatility in the afternoon. And there are some traders who will counsel people that they talk with, don't even trade, the end of the day on a Friday. And today's not an options expiration, but it goes double on an options expiration. So not a lot to talk about, and sometimes that's just the way it is. You know, we know where our theoretical support is. We said 92 is probably going to get bought. 90 and a quarter was the magnet, and lucky if you got back there. If you did, and it might signal a little more weakness. And we said the key was what happens on a bounce. How high can it bounce? Because dips have been bought. So if you've got one good trade under your belt, go play. And if you are thinking about shorting, reminder that sometimes a better short is from a higher high. As new territory gets hit, and then that's a better area to take a risk. At least you're giving yourself a little bit better odds. Because first scouts oftentimes get hit and then come back. So I'm looking at this chart, the 15 here, and looking at the 30 and saying, okay, I can see potentially where longs would love to get to, but just because they get there doesn't mean it's going to stay either. So the bias today was think conservatively if you are short. Obviously, as a long, think conservatively just because, you know, we've had the momentum push, but on the end of the day, end of the week, somebody needs profits. And all we know is that was done earlier today, partially. Anybody that was long probably was, you know, taking some profits, and then we get a little bounce back as a reaction to it. So still lunchtime, and we'll take a peek in a little bit, see what happens. And this is the squeeze right through here. And you can see just how this one bar comes out the top and traps and comes all the way back up to resistance zone, and then chop, chop, chop. And Zeke and I like to call this a one-legged stool. This is actually, you have, you know, this is the minor breakdown, but the look of this still is, you know, it's that V bounce. And so a lot of traders look at this and they see this and say, okay, we're breaking down, but really it's just a minor breakdown and right back into it. And same thing up here today so far. So this 92, we guess correctly, is probably going to be a very important area for today's trading. And once you sink below it and then get back above it, it's just like an overshoot, and then, you know, it's like overrunning first base. You run the first base, base hit, and then, okay, I overran it, but I'm coming back, you know. So these overshoots, you have to be very careful about overthinking them. That is a true breakdown. We said no, we're not going to any place until we get into this bar, which we do. This is the shakeout, and then the beach ball comes back. And we said this low right here is going to be our stop for anybody that's trading long side, buying in these 92s, 91s. This should be your stop. Should not break this low. If it does, then we're totally wrong, and we're still coming back this way. Never did. So the long side is still in control for now. For now.